With the latest on the corporate front, all the market trends, expert opinion, and sound business advice, it is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, U.S. President Donald Trump has introduced the sweeping new tariffs on all imported goods and reciprocal tariffs on some 60 countries. And China's manufacturing sector grew in March to its highest level in 1 year. And now let's begin with our top story. U.S. President Donald Trump has introduced the sweeping new tariffs on all imported goods to the United States and reciprocal tariffs on some 60 countries. Trump said his plan would set a 10% baseline tariff across the board. CGTN's White House correspondent Nathan King has the details.
So the debate was whether Donald Trump would impose a around-the-world flat tariff or do these reciprocal tariffs. Essentially, the U.S. says this is what you charge U.S. goods to be imported into your country. This is what we're going to charge you to come into our country. He's essentially done a little bit of both. What he's done is said, look, there's a flat import tax now tariff of 10%. And then the U.S. Trade Representative came out with this list of numbers, trying to work out exactly how much the U.S. is charged for goods elsewhere, taking that number and halving it. For example, it's come up with, and these numbers will be challenged, China has 67% import duties, so they're going to be charging them 34%. Japan has 46%, so they'll be charging them 24%. The tariff for South Korea works out at 25%. This is a huge change, something that will be felt by every nation that trades with the U.S. I encourage you to look at these tables. Look up countries like Botswana, Lesotho. A lot of these countries don't have a lot of exports, but they're going to be hit extremely hard on what they do to the U.S. Essentially, it's a global league table of tariffs. Now, how can countries get out from this? The president says it's simple. Invest in America. If you want to sell things in America, make them in America for American customers. But what about inputs that come from all around the world? We know it's not easy to change a global system. We saw it during the pandemic, and decoupling could take a long time and could be impossible for some industries. The other way out might be to lower your tariffs to the extent where the administration is happy enough for you to escape them, or, of course, come to a bilateral trade deal with the United States, all of which could be done, but there is no yet clear path. But what we do know is this is the biggest change into the global trading system in decades, and everyone's going to feel it. Nathan King, CGTN, at the White House.
So what does it mean for major U.S. trading partners? Will it backfire the U.S. itself? And how will it change the global trading system? For more on this, join us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. So Yan, let's start with you. U.S. President Donald Trump has introduced this reciprocal tariffs on some 60 countries. What are the details of this new round of tariffs?
Well, so there is across the board 10% of the tariffs on these countries. And so that is across board 10%. And then he also showed a list of about 25 countries that believe to run trade surplus with the United States. And according to the White House, these countries have much higher tariffs on the U.S. imports. And therefore, these countries will be levied at a much higher rate than that 10%. So on that list, we find countries like, for example, Sri Lanka is levied at 44%, Cambodia is levied at 49%, China 34%, 30%, European Union 20%, Vietnam 46%, Japan 24%, and South Korea 25%, and so on and so forth. So according to the White House, these are the countries that have much higher tariffs, non-tariff barriers, or currency manipulation, and therefore these countries will be levied at a higher rate. But I think there's also some other sort of argument, being that these countries are the ones that run surplus with the United States. So there is a simple calculation that the White House simply take the trade surplus of these countries, especially actually it's a goods trade surplus, and divide that by the total exports of these countries to the United States to get to that rate. And I calculated for a couple countries, and that's indeed the case. But in any case, the point here is that, all the countries will be seeing a 10% of the reciprocal tariff, but some countries will be levied much higher, according to the White House, based on their trade practices.
And Dr. Zhou Mi, so how do you view this reciprocal tariffs, and what's the purpose of it?
Well, if you're looking at tariff, I think that from some experts' estimates, the average tariff of the United States is already about 29% after all the reciprocal tariff came into force. So it is even 9% higher than the year of 1930, when we know there was a very, a great recession during that time. And it's an important lesson we have to learn from that, because the reciprocal tariff seems to be our kind of achieving the status of equalness, but it's on the contrary, it is trying to have a better position by the United States and ask other countries to pay more for the export to the United States. I don't think it's really a wise one, because if you are looking at this tariff structure, they are not trying to put the tariffs on some of the much more developed countries, but also on some of the developing countries and even the least developed countries. As Yan have mentioned, that many countries like Sri Lanka and Cambodia, they really are very poor countries. For those countries, how can they enjoy the benefits by exporting to the United States with such a high tariffs? So I think it's really a barriers for us to trying to think about the fairness. What are the fairness of the world, and how can we believe that free trade is still be one of the principles that we have to stick to, because that every countries are depending on the interactions with other countries. So this practice really are giving the world a really big shock, and no countries are in the exception. Even for those countries are not listed in the list, like Canada and Mexico. Donald Trump hasn't put it on the reciprocal tariffs list for Canada and Mexico, but they are still in some other concerns by the United States for the aluminum, for the steel, and also for the auto makings. So I believe that it's just a kind of strategies by Donald Trump to require more things from other countries, which has given a lot of threat to the world. Although Trump named it as a Liberation Day of the United States, it's also giving on the country, it's also giving so many burdens to other countries. And I don't think it's something to do with free or liberation.
And Yan, so Trump said he was doing this to save the U.S. industrial base and bring back jobs. Can he actually achieve this? How do you view that?
Well, I don't think so. I think, first of all, a lot of these tariffs are, again, just a tax on the productive sort of inputs, right? The factors and the components and parts that are imported from other countries. And so what that does essentially is it's going to increase the cost of production in the United States, and it makes the U.S. producers less competitive. And that's number one. And number two is that again, with all these tariffs, it's going to raise the prices of various products. For example, automobiles, we're likely to see the domestic car price rise by, $3,000 additionally, and the imported car $6,000. And so a lot of times what this does is that it will reduce the consumer demand. And so when you reduce demand at home, this does not make sense for suppliers to increase production and hire more workers to produce products that consumers can afford to purchase. And if we look at the Trump first term, I think it's very clear when Trump levied the tariffs on steel, for example, in March 2018, It does create some steel sector jobs, about 1,000 jobs. But because steel becomes more expensive, I think the price of steel has gone up by 2%, domestic production has gone up by 2%. But then a lot of the industries that use steel as inputs, right? Think about automobile industries, consumer electronics, and so on and so forth. Those sectors took a hit. And so overall, it creates maybe 1,000 jobs in the steel industries, but then it reduced about 75,000 jobs in these downstream jobs. And overall, according to the Federal Reserve Board, they just put up a research back in 2024. What they looked at is that the Trump's first term tariff war has basically on the net reduced the manufacturing jobs by 2.7%. And so I think the evidence is very clear. The economic theory also is very clear that these kinds of tariff war is not going to help to create jobs within the United States.
And Dr. Zhou, so now China is one of the biggest trading partners with the United States. So what does it mean for China? How could China respond to it?
Well, it is true that China is one of the main trading partners of the United States, and it is a quite different one because if you are looking at the structure of the international trade by the two countries, they almost covered everything from the agricultural products to the manufacturing products, and also even extended to the service trade. So I think that for the impact, it is far more beyond than for other countries because it will impact all the related supply chains to improve the strength on that supply chains, and so that people and the prices will feel a lot of more cost happened in that supply chain, and it will really giving a lot of uncertainties for the Chinese enterprises and their U.S. counterparts. So for us, I think that it is very clear that the Chinese government always expressed that we want the bilateral relation between China and the United States to be stable, and we value that, and we want to reach the mutual benefit for both countries. But in this regard, we were not just trying to stop or trying to not defeat our benefits. So for us, I think that one of the most important things is we should take care of the possible risks that will be posed on the bilateral trade. And also, they still have several days before it's really taken into effect. Even before that, I mean, the trade has begun quite some time before because both of these countries are located too far away. So the transportation may take several days or a week to travel from one country to another. Many enterprises already, expected this will happen. So for several, months ago, they have started trying to reconstruct their supply chains. For Chinese government, I think that they definitely will do a lot of things to help the companies to have the confidence. One of the practices is that we are going to improve the relations with other trading partners, while at the same time trying to improve the domestic demand. Well, it is true that Donald Trump has put a lot of tariffs on the import from China, but it also puts a lot of tariffs on other countries. So the world is thinking about how can we trying to transfer or diverge some of this demand from United States to other countries, and that is really provides more opportunities for us to consider about the possible cooperation. So for the enterprises, I think that they are already trying to do better in the flexible compatibilities and also trying to get enough information to make the judgment. I think that the supply chains are, along the supply chains, all the stakeholders should in the position to discuss about the ways to deal with the problem. Because that, the tariffs are there, we cannot just pretend that it's not happening. So the actual tariff should be put in certain areas to the consumers, to the rest of the supply chains. And in this regard, I mean, all the stakeholders will think about how can we still trying to protect the profitable and just remain in a more flexible way.
And there is also deep concern in Mexico and Canada. So, yeah, what does it mean for them?
Right. So we know that the previously Trump threatened 25% tariff, but this time around, I think that has been replaced by this reciprocal tariff of 10%. So it is kind of a relief, I think, for those two economies. But that said, I think that is still, a hit on the economy because, Mexico, they heavily rely on the U.S. market. About 88% of the Mexicans exports find the U.S. markets to be, their final destination. And then for Canada, that's over 70%. So I think in the sense that these two countries would also be affected, right, by these reciprocal tariffs. Not to mention, Trump's tariffs on the automobiles, that 25% will still remain, steel and aluminum, 25% that will still remain. So those are the sectors where, Canada and Mexico export very heavily to the United States. And so I think that would, affect these two economies. So I think for Mexican president, she already said, we wanted to have more constructive approach. Because they're so reliant on the US market, it's very difficult for them to retaliate. So I think she is still trying to negotiate. But also, I think they have made a plan to strengthen the domestic economy and reduce the reliance on, some of the strategic sort of products coming from the United States and so on and so forth. So I think that would be their response. And I think the Canadians Prime Minister also talked about, to defend their economy, defend their industry and their jobs. So I think it's likely that there may be some retaliations from Canada, but at this point, I think all countries are in one way or another trying to find a way to be able to negotiate or trying to see if there is a way out. And if they do retaliate, it's probably going to be a very targeted and meditated approach. Because again, tariff war and the retaliation would only produce lose situation.
And there is also deep concern in Europe over these tariffs. So what options does Europe have, do you think?
Well, I think, again, I've seen different governments have relatively, different sort of responses. We see, for example, the Irish Prime Minister basically says that the EU is regrettable about this, and he believes that this tariff doesn't benefit anyone. We're seeing, Spain, for example, the Prime Minister said they will respond decisively. So I think mostly countries are in some ways trying to find ways to be more constructive and trying to negotiate, but they also pretty much take the stance to say we will defend our economy because these tariffs are not fair and they're unwarranted according to some of the European leaders.
And Dr. Zhou Mi, so Trump has already announced plans to impose 25% tariff on all imported automobiles. So which countries do you think will be hit hardest? And when we look at the German auto industry, one of the biggest sectors in the German economy, what kind of impact is this going to have on the auto industry in Germany?
Yeah, as you mentioned, Germany is one of the main producers of the automobiles, and it is also true for the Japan. So actually, the auto producers may suffer a lot from that because they will have a lot of worry about how can they still export the automobiles to the United States. But it is not only about those companies or those countries. If you are looking at Tesla, I think that Tesla has a lot of production also in other countries. And although Elon Musk is one of the members of the Donald Trump team, but I think he also suffered from that. So the automobile is one of the most internationalized industries. There are so many collaboration around the world. So it's not only about Germany, about Japan, also about so many other countries. They are producing certain part of these automobiles, and they are involved in the innovation and research and development. So I mean that supply chains will, and also the ecosystem will be affected too much. And the companies who are trying to look at the potential of the U.S. market, they may think that it is impossible for them to continue to do that out of United States. Some of them may try to think about the collaboration or have joint ventures in the United States, but I don't think that is the final solution because who will know that what will happen in the coming days because it's there are still so many uncertainty about the more tariffs or even the export control or other system that will block the international cooperation in the auto supply chains. And in my understanding that auto industry is in a very important time for transfer from the traditional fossil fuels to the electronic vehicles. So we are seeing that some of the potential innovation are happening around the world. If US put some tariff on that, I mean, in the other part of the world, the innovation will still be continuing. But in the United States, the innovation abilities and the speed will slow down. That is definitely not a good thing for the consumers of the United States.
So, Dr. Zhou Mi, currently fear of deglobalization is also high in the world. So, what does Trump's tariffs mean for international trade and also the global economy?
Well, if you're looking at globalization, I think that we can look at it as just the water flow in the different areas. If there are so many mountains, so many ditches, I don't think that it will have a better flow. So the globalization is the natural demand of the different countries' stakeholders. They believe that they can do business with certain and common principles, something to do with the WTO, something to do with their belief that they will have a better condition for the cooperation. But the United States has built a wall around itself and trying to block the flow of the some of the resources to the United States and their technology or knowledge to other countries. I think that will really block the cooperation a lot. But we have to say that the world is such a big world. We have so many different demands and also the supplies. So the globalization is still there. And in my understanding, they may reach to another different level. These levels, maybe the United States is not there, but I hope that we can do more by the collaboration because we still need more input from different sides. And the globalization is a very common and a natural trend. I don't think that even the policies of the United States will change the total trend of the globalization.
Well, we're speaking with Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, China's manufacturing activity expanded at the fastest pace in 1 year. Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. China's manufacturing activity has expanded at the fastest pace in 1 year. The official Purchasing Managers Index, or PMI, came in at 50.5 in March. So, Dr. Zhou Mi, the latest manufacturing PMI data is positive. So, what do you think has made China's manufacturing activity expanding at the fastest pace?
Well, I think that the main reason is that the people, especially the manufacturers, are having more confidence about the future. While they are preparing for the expansion of the demand, maybe they find that demand in Chinese domestic market, or they find some demand in other countries. But they do believe that the expansion is on the way. So actually, it's not only about the the quantities development or expansion. I mean, a lot of expansions are on the quality. So the input of the artificial intelligence and also other technology has improved the abilities for the manufacturing to improve the efficiency and have a better connections with its supply chain stakeholders. So I would say that manufacturers are really important part of Chinese economy. If the manufacturing is getting stronger, I think the economy of China is also expected to have a better performance. The PMI is a forecasting indicator. It's showing the the following months or even longer term of the development. So the PMI is really giving us some of this confidence that Chinese economy is still in the way of going up, and we are gathering more resources from different parts of the world and attracting a lot of input from other countries, because China is a very strong and sustainable environment, and we have welcomed the involvement for so many different stakeholders in the world.
And yeah, so technology advancement was going to play a huge role, and particularly in the field of industrial manufacturing. So how critical will AI become in terms of driving the efficiency and innovation in China's industrial upgrade?
Well, I think AI is a really potent, right, general purpose technology. So it can definitely be applied to the manufacturing, industrial production sector. And we have already been seeing, some of these AI-enabled robotics that are being used to produce EVs or, consumer electronics and in some of the so-called smart factories in China. So I think, with open sources, the AI, with the ability of companies to quickly integrate AI and tailorize the use of AI in the production line, I definitely think this is going to help with, efficiency and with productivity growth. So we have already seen, with the integration of these smart technologies, right, being automation with now AI, it's going to help to accelerate product development cycles. It's going to reduce, waste and inefficiency. It's going to help to conserve energies, and it's also going to improve the product quality. You've seen the inferior products have gone down because of the precision in the production line. So I think all of this means that, once AI is being widely integrated in the manufacturing sector, it's going to really help to boost the productivity and enhance, product qualities and reduce, energy consumptions and so on and so forth. So I think that is very important and helpful for China's continuous, improvements when it comes to industrial upgrading and also climbing up, the value chain in the industrial sector.
And yet also in this week, China's Ministry of Finance said it will issue 500 billion yuan in special treasury bond to bolster the 4 state-owned commercial banks. So what do all these treasury bonds signal about the direction of China's banking sector and the economy?
Well, I think first of all, the banks still are quite well capitalized at this point. But I think this 500 billion recapitalization are trying to do two things. One is that it is going to, boost the lending of these banks, not only to the industrial sector to support, right, that we just talked about technological innovations and integration of, cutting edge technologies in the traditional sectors. But I think it's also a way to help with providing sufficient liquidity for the property market, and so on and so forth. So I think that, provisioning of liquidity is very important. And so this is really to reassure the banks they will have the sufficient capital to support, their lending.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.